Hi there, Dave Keller here with Market Misbehavior. Anytime I get an opportunity to interview a strategist, an analyst, some technically oriented investor, I love to ask them what their one chart is. And that essentially means if you had just one chart to give you a good read on the markets, besides a chart of the S&P 500 or something pretty straightforward, what would it be and why? And what's been great is it's led me to a great discovery of different ways of thinking, different charts and different layouts that I might not be as familiar with. So I want to share with you my one chart for today. Essentially, this is a chart of the S&P 500, a daily chart, and then I'm looking at the new highs and new lows for the New York Stock Exchange, and then at the bottom here for the S&P 500. And that's probably the best illustration of the overall breadth in the form of new highs and new lows, the section at the bottom. So here we have the daily chart. You can see the stepwise motion of higher highs and higher lows, the pullback in August, and the stabilization there, the support around 28.25. Then look at how we are once again sort of teasing those highs from July. And today's Fed day, we had the announcement, a little bit of sell-off, but rally back and close up to the highs for the S&P 500. So the question is this the resumption of an uptrend, or are we sort of hitting the ceiling of the market, the all-time highs before we come back and settle down into the September October period here? Well, the new highs and new lows would tell me to be a little more cautious versus optimistic, and here's why. As you see, the S&P has gone to new highs through the month of September, not new all-time highs, but a series of higher highs and higher lows. Look at how there have been less new highs on each push higher. Now, if this was a healthy market with a resumption of an uptrend with what I would expect much further upside, you would want to see more and more new highs. Every time the S&P goes higher, there are more and more stocks pushing up, going to a new 52-week high, which would tell you that it's a broader and broader gain across sectors, across styles, et cetera. What this is telling you is that's not quite the case yet. So as the S&P has gone to higher closing highs here, we can see lower highs in the new high indicator for the New York Stock Exchange and also for the S&P 500. So again, it's not the end of the world, and it's just one bullet point among many. But for me, this is a really interesting one to watch. For me to think of this as an all clear, long and strong, the market is potentially going to go much higher. Obviously, it's the traditional price analysis looking for break above the previous highs, a new closing high, confirmation, some sort of upside follow through. But also, I would want to see these indicators start to slope back up and see more and more S&P names, more and more New York stocks breaking to new 52-week highs. That would tell you it's a broader and broader gain with more further upside ahead. If this sort of thinking is of interest to you, I hope you'll hit subscribe and check out the other videos on the Market Misbehavior channel. Thanks so much.